Hi everybody, it's Terry Ryder from Hotspotting. If you happen to own an investment property in some of the resources related towns of Queensland, it's probably been a grim time for the last, say, 3 or 4 years. But there are signs of improvement. Things are looking up in many of those markets, and we're constantly seeing evidence now in our day-to-day research that there is an uplift in some of those markets that went into decline for various reasons in connection with the resources sector in Queensland. Places like Mackay, Emerald, Moranbah, Dalby and others, sales activity is on the rise again, and vacancies, which were the big problem, are trending downwards. In many cases, what happened wasn't so much a downturn in the resources sector, but it was the changes in the way the resources sector behaved around mining towns and mining projects, i.e. fly in, fly out, and people when they fly in to the mining area staying in workers' camps rather than renting local accommodation. That's what happened in the mining town of Moranbah, where up until a point all the mining personnel working in the coal mines in that Bowen Basin area were actually buying or renting local accommodation, which was very, very expensive. So the mining companies decided to create workers' camps, and suddenly there were big vacancies in towns like Moranbah and other places as well, like Emerald, Dalby, the towns of the Surat Basin, like Chinchilla, Roma, Miles. They were all affected by that phenomenon. So we've gradually seen the vacancy rates in those areas soaking up and getting down to more acceptable levels, and now we're starting to see a rise in sales activity. So there's some prospect of a return to price growth in places such as Mackay, Emerald, Moranbah and Dalby. Gladstone, one of the places that was worst hit by the phenomenon of workers' camps, leaving all that lovely new housing product vacant, and with vacancies went as high as about 12% in Gladstone, we're now down to about 4%, and the trend is downwards, and there's prospects for a return to some sort of growth in rentals and prices in Gladstone later this year as well. And at the same time, we're seeing a revival of the resources sector. So we're seeing mining projects that were put on the back burner, now back on the front burner, and new projects being cranked up. An example of that, Roma was one of those places, one of those towns that was severely hit. Its median house price has fallen 30% in the last 5 years, and it's now down to about 240,000 for the typical house, because the vacancies went as high as 12% back in 2015. But now the vacancy rate is down to around 4.5%, and there's new projects coming into the area. Santos, for example, recently announced an expansion of its work in the Roma East gas fields near Roma, $750 million project, creating 400 construction jobs. So that's big for that area. But the question is, when those workers come into work on that project, where are they going to be staying? Is it going to be, again, a case of workers' camps, or will there be some positive impact for the housing market in towns like Roma? Let's hope so. Just supporting our view of recovery in some of those resources-related areas, we have a recent report from the National Valuation Practice here in Todd White, and it has identified some markets that it says are recovering in regional Queensland, and includes on that list some of the places I've mentioned, Emerald, Gladstone. Also it mentions Cairns, Hervey Bay and Townsville as markets that are starting recovery phases. We're particularly interested in Townsville. We see that as a market with a lot of promise. It's been through hard times where vacancies were high, unemployment's been high. It had some economic reversals like the Clive Palmer nickel business, which closed down, putting lots of people out of work. But that, generally speaking, Townsville is a very strong regional centre, and it's had a good property market in the past, with good growth in the past, and we see it now coming into a period of growth. And one of the things that we report on in the new March edition of the Ryder report, that's our monthly newsletter, is that Townsville has recorded the strongest growth in employment of anywhere in the nation in the past 12 months. Jobs in Townsville have grown almost 12% over the last 12 months, which is 3 times the national average growth. Obviously rising from a low base, from a negative position, but nevertheless it's indicative that Townsville as an economy is on the way back. As jobs are created, there's lots of big projects coming up in Townsville. Some of them are now under construction, and other big ones are still to come. But as that work rolls out, we're going to see more and more jobs created in Townsville. We're going to see that jobless rate coming down further and further, and we're going to see the real estate market cranking up. The buying is good there because prices have dropped for the last, say, 3 years. So it's one of those opportunity markets. If you can convince yourself that Townsville has a future, we certainly believe it does. We think it's one of the strongest regional economies, generally speaking, in Australia. It's got such diversity. It's got a strong government sector. It's got a big military economy because it's got a RAF base and an army base. It's got a big tourism sector, a big manufacturing sector, and some strong links to the resources sector, which is now coming back strongly. And a number of big resources companies have undertaken to make Townsville their headquarters for the big projects that are coming up. So good prospects there. Generally, the story for those Queensland regional centres that have been impacted by the resources sector, that it's now a story of revival. So if you have owned property there and you've been suffering for the last few years, things are looking up. And for those of you who don't own property there, maybe you would consider the opportunity is now exists for buying in those markets, but always be aware that some of these places will always be more volatile than your average markets because they are connected to the resources sector, which is very cyclical. So it's got a higher level of risk. Always keep that in mind. Okay, that's it for now. Terry Ryder from Hotspotting signing off. We'll talk to you again soon.